Many mainstream analysts are predicting that stocks will recover soon, but one 20-year market veteran says we'll instead witness a cash frenzy unlike anything we've experienced in 21 years before stocks recover. And he's urging Americans not to buy a single stock until they see it. According to Dan Ferris, who gained acclaim for predicting the Lehman Brothers crash in 2008 and calling the top of the NASDAQ in 2021, this is the number one most important thing to pay attention to for 2023. And he's not talking about another market crash, politics, or inflation. As all this unfolds, the financial consequences could last for several decades if you don't understand what's happening. There will be winners and losers. Now is when you decide which one you'll be. This is why I strongly encourage you to read about his warning totally free today. Get the facts yourself. Go to marketdisaster2023.com to get your free copy of this report. You can learn how to get his 4 steps to prepare for what's coming. Again, that's marketdisaster2023.com for your free copy of his new report. Hi, this is Daniela Cambone. Welcome back to the Daniela Cambone Show with my guest today, who the last time was on, said and warned us that something big was about to break. This was back in July of 2022. He said something big is about to break in the financial system. Don't let it be you. What is he warning us about today? Please welcome back E.B. Tucker, author of Why Gold, Why Now? E.B., I know that the cutoff has passed to say Happy New Year, but happy 2023 anyways. How are you?
I'm doing well. Thanks for having me. I guess we could at some point say Happy Chinese New Year. Maybe we could just move on to the next holiday. I love holidays more. When I was younger, I hated holidays. But I got to tell you, as I get older, I start realizing why people like holidays. Maybe I'll work at a bank or something when I'm much older, and then you have like tons of holidays or something, or a government office, which I think I might be quite good at. That'd be great.
Nice.
Tons of holidays.
So Are you embracing resolutions? Well, we'll save that for the end, maybe.
Yeah.
We'll save that for the end. I want to start with your big warning from the summer that something big was about to break in the financial system. And when we hear statements like that, it's kind of like when you go to a fortune teller and they tell you something drastic's going to change in your life, and then you're looking for the clues. You're like, was it this? Was it that? So you warned us of this before, the crypto blow up, before Sam Bankman-Fried and all that drama. But I'm wondering, were you alluding to the crypto situation or EB, the Fed's ongoing inflation fight, which saw mortgage rates spike from 3% to 6% in 2022 and has set off the second biggest home price correction of the post-World War II era? Is it either of those two things that you were perhaps waiting to see unravel?
No, I think it's still going. So it's funny. People were always saying like, "Oh, you thought rates wouldn't go up 2 years ago." I'm like, guys, just so you know, I don't actually sit in the Federal Reserve meetings, so it is actually quite difficult to know what these guys are going to do. But what they did is they kicked off this raising. And it's unbelievable. If you look at a chart of it, it's like straight up in an elevator. The rate goes and goes and goes and goes and goes. And it's going to keep going until there's pushback. Do you notice how like when there's pushback on anything nowadays, like the Canadians went with the masking until the truckers went crazy, and then finally, okay. Right. So the Chinese did the same. Okay, with everything until there's pushback. There's no pushback. So what's happening is crypto doesn't really count. Okay, so you have only $1 trillion of devaluation in crypto or something like that. Top to where we are now. That's not what we're talking about. What we're talking about is until one of the massively over leveraged companies a zombie company that was only in existence because interest rates got lower and lower and lower, has to refinance its debt and says, we can't do it. I mean, 5% debt, we financed at 1% before. The business is terrible. And by the way, there's a website someone sent me today. I think this person is watching, by the way, on LinkedIn. They sent me this layoffs.fyi. It tracks all the tech layoffs that are going on. It's unbelievable. I mean, these big tech companies are laying off 10% of the workforce. This is going to have a huge effect, right? So people are being laid off. Everything costs more. The interest cost of borrowing for anything is going higher and higher. and we are slowly grinding towards a position where something that's very weak cracks. And what that means is that company ABC that's got too much debt comes out and says, we're bankrupt, okay? And we're waiting for something big like that. And it doesn't mean something the crypto situation is a speculative mania blow off coming back to earth. That's kind of a different story. And by the way, I don't hear anybody saying they're done with crypto. Just so you know, I hear people saying, yeah, it's going to be a crypto winter. Yeah, I'm going to be going to cold storage. Well, I think crypto is the future. I hear all that, but I don't hear anybody saying, you know what? I'm going to take my 6 cents of dog coin and get out of here. I don't hear anybody saying that yet.
Yeah.
Yet.
You know, that's interesting. Do you think the fear is, it's still that fear of missing out? Like, oh no, if I take it out now, that's when it's going to start, rebounding. That's when we're going to have a huge takeoff and I'm going to miss out. Do you think that's what's keeping people in the game when it comes to crypto?
So I have a huge advantage here because I've been involved in the speculative resource market for so long that I'm now basically an amateur psychologist. And so what happens is that when people finally give up, and they call that puking in the business, right? But when people finally say, I should have known better, I'll never do this again. E.B. Tucker sounded like he liked that thing 5 years ago, and now and I'm out of here, okay? That's when you know that probably you should be a buyer, actually, right? Like everybody likes the story of I bought all the rental properties, and people don't understand that there was homeless people sleeping in there and no air conditioner and boards on the windows. And I mean, it was really bad, right? I mean, it was to the point where people were saying, are you crazy? Like, do you know what's going to happen? Yeah. I'm like, yeah, well, the house is 20 grand, by the way. Okay. I mean, 20 grand is like a pretty good price. You get like the whole lot, the house, everything that goes along with it, right? 20 grand. So people were puking. That's when you get the low, but you're not seeing that yet. You're not in crypto. And guys, take a poll, like go to your friends, go to dinner with your friends or something and ask people, hey, what do you think about crypto? I mean, I'm always asking people, they're telling me things and I'm listening and I'm saying, yeah, what do you think about that? And I listen to what they say because it's important to see their psychology. They're holding on now.
So let me ask you this, then have you had a change of heart when it's come to crypto? Because I know in the past you've said it's like, for you, it's like entering a casino and just pure gambling. So the fact that people haven't given up, that, is this changing your mind at all?
It doesn't accomplish anything in my opinion, because what's happening is everybody just goes on and on arguing. That what happens is they get louder and louder and louder about all these crypto terms that they start using and this DeFi and blah, 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 on and on and on and on. But it doesn't matter because there's 600 exchanges and 13,000 coins and all these different things. But it doesn't matter because the central bank is going to make its own crypto, and you can't speculate in that. And they're not going to buy Pancake Coin to do it, and you're not going to use Pancake Coin to buy pancakes or to buy anything for that matter, and it's not going to happen. And so what the deal is that this whole exercise got everybody used to the vernacular, and it got everybody saying, I mean, even your Aunt Nancy is comfortable with the idea that crypto's cool and somebody made a lot of money on it. And if you're smart, if you understand it, and she is ready to have FedCoin on her smartphone. She's on that thing all the time anyway. She's ready to buy stuff with it.
Okay. We have a lot of ground to cover today, but we're going to get through it. We're going to get through it together. Just getting back to your point, and then we'll move on about how, it will be, let's say, a tech company that can't refinance its debt, and that will break the system. But how does that trickle down to us little people? How does it affect the everyday person? Create that scenario for me of how it could create such a break that just everything blows up.
Well, I mean, if you're walking to a party and you see the cops pull up, do you keep going to the party or do you turn around and leave? I mean, the deal is you leave that situation. Okay, so you're right to say, what do we do as smaller people? But while we're watching this happen in real time, okay, this is like a purgatory style situation. You have to stay in the game, meaning you have to remain solvent so that you can play in the next inning. All right. And now is not a time. If you notice, nothing is going up in value on a speculative basis. All these stocks that were flying in 2021 and 2020 are in the toilet. Okay. Like Bed Bath and Beyond, bankrupt. Okay. AMC movie theater, forget about it. Like all these things that were popular are way, way down, and they're not going to come back up because people don't have surplus income to buy hope and prayer style half court shots. What it is that everything's costing more money, and so there's money coming out of the system, and at the same time, the rates are going up so fast that anybody that's got to come back to the credit market. Let me explain this to mom and pop, just so you understand. Most of the time when a company, a major company like an airline or a tech company, or they go out and they borrow at like 2, 3, 4 year increments. They spread the money out over this time. So you borrow at 1%. Now it's time to re-up on some of that money, and it's 5%. But wait a minute. Your business is suffering. Actually, the prices are going up and people are unemployed. And so your business, your revenue's down. And so it's going to be 8% to borrow. Well, wait a minute. We don't have 8% because we were only making razor thin margins to begin with. Now we're actually losing money, and we have a chief sustainability officer, and we have all these HR people. We have all this stuff going on, regulation, more taxes, whatever. And so it's a difficult time because you have to make concessions to borrow. The business doesn't work. So the weakest of the herd gets slaughtered. This is what happened. In my book, I explain this in an old-fashioned way about recessions. I'm like, you got to understand, it's really simple. Some people should not be in that business. They didn't have enough capital, they paid too much money, and they should not be in that business. Now, Daniela, this is important. I'm always asking people about what they think about this and that, and people are telling me about their business, whatever. I'm hearing the same thing over and over again. All my friends in the startup scene tell me they have enough runway left to operate for another year and a half or whatever because they raised money last year. Listen for the word runway, and then they'll come back to the market, and the market will be better. But I bet you it's not better. So they're going to run out of money, and then they're going to come back to the market, and the market's going to say, you don't even make money. You're never going to make money. I'm willing to invest, but I want better terms. Okay, this whole thing starts shrinking down, and the worst companies crack. They're unfinanceable, and they're write-offs. And that's when things get really painful, right? So the Fed is going to go until that happens. Now, while the Fed's going, get away. You see the blue lights? Don't go to that party. Go to some other party, or go home and wait. It's really hard for people to wait, but you're in a scenario right now where if you make a big move, you're probably going to get hurt. So you want to own things that you're comfortable owning and be comfortable with that, and keep cash and stay liquid, and don't be involved in things that have a quote unquote runway and you think the market's going to change drastically in 18 months, because it might not. You might end up saying that thing that had the runway, you should have sold it for 50 cents on the dollar and been done with it.
That makes a lot of sense. To that point, help enlighten us here. And I think Bed Bath is a perfect example, or AMC, of things that have completely flatlined. To your point earlier, that sometimes you want to get in on those things that no one wants to touch, that look like they can't be revived. How do you distinguish something that's completely dead and won't be brought back, or something that people have given up on and could have a second chance here to really take off? Are there any insights or patterns?
Yeah, so the thing to understand about the Bed Bath type situation is that business is not going to go away, but what's going to go away is the stock. Okay, so the business itself is going to stay. I mean, I remember what happened to Kmart in the 90s, right? Like Kmart did not go away, but the stock went down and somebody bought all the bonds and took it through bankruptcy and controlled that, and then made a lot of money. And a lot of times we can't do that. And it's not that we can't do it. It's just that we don't have, we're not managing $1 billion in a credit fund. We can't do it. We have to be more practical. So what I like to do is look at a situation like AMC. AMC is a lot of fun to go see movies and have the genetically modified popcorn with lots of terrible additives in it. It's a lot. I love going there. But the thing is that theater is going to be there, but that stock was $12-13 billion. And that stock is probably not going to be there. And if it is, it's not going to look the same. If you notice, They're now having to raise money. You look at this. So you look at the zeitgeist. You look at the attitude towards these things. If everybody's given up and then the company has reformed itself, maybe you have a chance. But while you're still in decline, that's the time you want to just stay back. You want to stay away.
Yep.
You want to say to yourself, I'll reevaluate this in 6 months, okay, because I like the business, but it's too dangerous right now to mess around.
I want to talk the U.S. dollar now. You painted the picture of the U.S. dollar last time you were on, that, it's like this caveman going around with its club and just knocking everyone on the head. As we're talking now, USD has definitely pulled back, but I think there's an interesting narrative that I'd like you to comment on. We have Iran, Russia saying they want to issue new stablecoin backed by gold. We have now Saudi Arabia saying they're open to settling trade in other currencies. We've alluded this to past interviews, how we're going to see other nations turning their back, looking for solutions outside the U.S. dollar. I want to get your thoughts on what's happening now and where you see the U.S. dollar headed.
So it's now, I think it's peaked. I mean, it ran last year, was like the ultimate blow off year. And then we saw in the fall, I think this is the turn. And I think this is the time when the US dollar, meets gravity. Okay. What does that mean for people? All right. Well, think about it like this. There was a lot of money that came in to the US stock market during the time when the dollar was high, right? The U.S. pulled a lot of money in. It was really good for the big tech stocks. And so if you have the opposite happen, it's something to really think about. If a lot of that international money is going out instead of coming in, it could be several years where it's difficult for the broad equity markets. If you just own the FANG stocks or the NASDAQ 100, like if these types of investments did great for 10 or 12 years. And I think they're going to go nowhere. I mean, it doesn't mean everybody's obsessed with crashing. It's not a crash, but it's a period of time where the market goes nowhere. We've had this before. I mean, late 60s, 70s, the Dow went nowhere. It hit 1,000. It took 16 years to go up from there, right? So this can happen again. And also during this time, it becomes difficult for the Treasury to finance itself. You start hearing Yellen, she's rumbling about the debt ceiling and all these different things. I mean, this is coming to a living room television near you. I mean, not my house because we don't have a television, but this is coming to the evening news near you, this debt ceiling and what are we going to do? And maybe we got to raise the tax and we're not sure what to have happen. And bond vigilantes are attacking the bond market and all this stuff. It's like, no, it's not happening. It's you got 32 trillion in debt. And now it costs, by the way, I have the Treasury rates behind me here. It's 4.6% for 90 days and 3.6% for 10 years. So the government has to pay 4.6% to borrow for 90 days and only 3.6% to borrow for 10 years. So that doesn't make any sense. I mean, imagine loaning someone money for 10 years at a lower price than you would do it for 90 days. I mean, the system is majorly broken. It's a centrally planned economy, and you cannot control something but so much. If you exert so much control, things pop out from places that you were not expecting. So as the dollar starts to roll over, as money starts to come out of the U.S. system, as the interest rates continue to go up and the Treasury needs more and more money because you can't cut any federal programs. Once you start them, you cannot cut them. And nobody wants to give anything. And all this happens, you have to really ask yourself, what are other countries doing? Okay, well, you said China, Saudi trading together. Well, obviously, I mean, look at what happened with Russia. I mean, they seize all of the foreign holdings of the Russian central bank. Come on. I mean, everybody, well, yeah, but Russia's bad. Okay, so if you're bad, all your stuff gets stolen. But if you're good, all your stuff is not stolen. Don't you love freedom? I mean, this is kind of the narrative, right? So people don't like this. I mean, if you are Saudi, you say, well, do I really want all of my foreign reserves sitting in the system that can just be taken at any time? I mean, okay, so imagine you're running another country's central bank. You have to ask yourself that question. Is it really safe? Or should I begin trading with all these people directly, okay, and creating a system that we trust in all these different areas. And I think part of that is why you saw the action in gold that we saw recently. Like, I just want to mention one thing about gold, because, you know, we're kind of getting tired of talking about gold for years because it hasn't made a lot of sense. But in the fourth quarter, the price got to 16.25. The price of an actual physical ounce was about 18.75. An eagle, right? So if you called up your dealer, give me an eagle, about 18.75. What are you talking about? It's $250 less in the market. Yeah, but that's not the price of an ounce. It's a futures price. Now the price is 1900, and the price of the ounce of gold is like 1960 or something, right? It's not that much. And so the price has not really gone up. So what you saw was the futures price come back up. And I think there's been pressure with a lot of these central banks, a lot of these other governments saying, like, you know what we're going to do? Actually, maybe we get rid of some of those treasuries, because, I mean, you know, they're printing plenty of those, and maybe we get a little bit of gold. I mean, what do we got to lose, right? I mean, we can always, the Saudis will take it from us, you know, like the Russians will take it.
Oh, so that's why you think we've seen that. That's interesting. That's your thesis surrounding the central bank buying that we saw in the third quarter?
That's what just reported buying, right? I mean, we don't really know, right? I mean, we don't really know what's happening. We know what they say, but what we do know is that remember earlier I was talking about the test for when something is bottomed out. Everybody listening, let me just tell you, I probably know, I'm not trying to sound smart here, but I probably know more about this than anybody alive, right? I've been working in the gold equity business for so long now that I've like literally kind of like seen all this, and this industry is left for dead. Okay, so like the gold industry is so small, it's a pin dot on the screen, right? It's so small compared to the overall capital markets, okay? And what I mean by that is you see these central banks buying, you see these countries using gold as a mechanism to trade different things. You see what I'm talking about with the physical price. And then you get into the industry and you realize it's shrinking. Production is shrinking. There's nothing being discovered. There's only 2 royalty companies under $1 billion because there's been 9 acquisitions in the last 19 months. There's nothing left. And then you look at the mining companies and you look at, you know, Barrick and Newmont, Agnico, that's pretty much it. I mean, then you have a couple of junior size, and then there's nothing. And the Vancouver scene, there's nothing to speculate in. I mean, you know, it's dry, it's boned, it's like a dry creek, okay? And so where are you going to get the gold? I mean, you look at the numbers this is the futures market here, where you look at the numbers, you're like, this is not gold. This is like paper. It's paper chasing paper. Now, so what I think happened in the fourth quarter was you saw some of this demand is overpowering the futures market. And so then you have to ask yourself, what is really the price? What is actually the price of gold if the few miners that are left are not really making money? You know, their oil prices are higher, their ESG costs are higher, their labor negotiations are higher. The Chilean government wants, you know, a pound of flesh to keep mining. The Panamanian government renegotiates, you know, with Lundin and all these guys. Think about it. It's crazy. And so what is the real price? And so this year, I think we'll find out what the real price is. And to be clear, I don't think it's like dramatic. I just think that $1,900 is not like an actual real price for gold. You know, it's got to probably have a 2 on it. And I think you're going to see other people saying, guess what? You want to hold it at 1,900? I'll take a plane full of it, right? The other central banker says, give me a whole 747 full because I'll take it at 1,900.
Interesting. Very interesting. So a few thoughts here. You mentioned the reporting requirements, and I'm always scratching my head with that, right? We're taking at face value what they're telling us, like, you know, oh, now China's coming out saying, oh yeah, maybe we bought some. We don't know who the mystery buyer was of the 300 tons. But wouldn't some of these countries, if there aren't reporting requirements, and I'm not, you know, I'm not advocating for lying here, but wouldn't you be surprised that China wouldn't come out and say, you know what, we actually own more gold than the U.S. We're more powerful. No one's checking the numbers.
Okay.
Why would they want to hide the numbers? Let's just play this out.
Okay. This is a good question. So, you know, I have a background in fund management, equity fund management. So if I'm
Yes.
buying a position, right? So let's say that I decide that I'm going to buy
Yeah.
Metallo royalty for the fund because I think it's deeply undervalued and I'm extremely excited about it, hypothetically. So I'm buying Metallo, and I'm not going to tell people that I'm buying Metallo until I'm done. And then once I'm done, I'm going to be on stage, at the SALT conference or something, and I'm going to be talking about how a royalty is like the ultimate inflation hedge, the ultimate leverage to higher gold price, and it's deeply undervalued. And if somebody's going to sell me filet mignon for the price of flank steak, I'm a buyer with as much money as I can possibly find. And then everybody is coming after me. Does that make sense? So if you're China and you're buying, and you're trying to, where are you going to get the gold? I mean, the last thing you need is a rising gold price, because already you're the biggest producer in the world with 400 tons per year. You're trying
so they're hoarding whatever they're mining. They're keeping
definitely.
whatever they're mining.
You cannot take any gold out of China. Forget about it. It's not going to happen. So then you got 400. So that's about, there's 3,000 tons a year, maybe mined, something like that. And so let's say you're at like 11 or 12% there. And then the Russians maybe need a little bit of extra spare cash to pay for tanks and stuff. So you're gonna buy some of their gold because they're a big producer. And then you start looking around and you can't find any. It's like you can't get it, right? So the last thing you want is a panic. That's probably the likely scenario of what. And the U.S. says, well, we don't, we got some gold we mine, but we don't really care because we manufacture paper, and if you don't take our paper, we'll just hit you in the head with a club, called the dollar system, and you'll just behave yourself. But that's back to our original point. How long can that last? I mean, if that starts coming under pressure, then what you want to own is the hard stuff. You want to own the actual resources, because what you're seeing is the resource producer is beginning to assert power that the resource producer hasn't had in 25 years.
So to my second point, how long can they keep the dollar story going? You've come on saying the Fed's main mandate is to keep the dollar strong, keep it up there, keep it numero uno at whatever it takes. Quoting Mario Draghi here, whatever it takes.
To keep the demand, I mean, yeah, it has to be in demand, needed and used and circulated and flowing, or else the system is massively deflates in a heartbeat, which I don't think is going to happen, by the way, just to be clear. I don't think that I think people that think that the dollar is going to crash are totally dreaming. Like, I mean, forget about it. I mean, this is not something that goes poof, gone. It's not at all.
You alluded to it before. Let's go there. Central bank digital currencies, what you call the Fed dollar. Will it begin this year? Has the path already begun? Where are we at in this narrative, according to E.B. Tucker?
Well, the people think crypto is fun, cool, and hip, right? To use. So that's good. You couldn't say that 10 years ago. You thought it was like for weirdos 10 years ago, right? So that's good. The next thing that we need is some sort of rattling crisis to rattle the system and to make everybody scared enough to take a solution. Like, the whole game plan is I scare you, and then I offer you a security blanket also. All right, so you're scared, and now, hey, I got a blanket for you. Here you go. All you're gonna have to do is give up a little bit of your freedom. Okay, I'll take it. That's the game plan. So you create a system, a rattling of the system. Do you remember the 1930s, the FDR gold thing? It was
yes.
Like in my book, I have all these newspaper quotes. Every single day it was, these traders have the gold and the country, so you scare, you get the gold, and then you revalue the gold. That's the name of the game. So it's the same thing every time. And that's the next phase of the process. I mean, that next phase is a wonderful amount of control if you're a central planner. I mean, you reassert yourself. as controlling this little, remember the world's going into zones. So you reassert yourself controlling this zone. And you got to think that that's ready to go this year. They're testing parts of that. There's been articles about this on the Bloomberg that, the Fed is working on this. It's impossible to know. Like, people don't even send me a LinkedIn message about, I'm not in the meetings. Okay. So like nobody has contacted EB Tucker for, to let me know the schedule of when they'll be testing the Fed coin on you, but it's coming. And we know the Chinese have been testing it, right? They've been giving people some digital yuan to try. We know that they're trying to create the Belt Road Initiative circulating on, there's a name for the system that they're creating this. So we know all this is happening. So we have to say it's got to be right there. I mean, it's totally logical that you would have this whole recession. There's all this recession fear. Something rattles really hard, and this is the next phase, is that we stimulate you with your FedCoin wallet.
Before we tie everything kind of together and give folks a direction here, just getting back to your thoughts about equities, could you not make the argument that if you take out the noise right now, like the Amazon, the Tesla, the growth stocks, that equities, could you make the case it's the place to be?
So there's famous data on watching. You have like the old trend, right? You have everybody's bought into the old narrative. Okay, so like the tech stocks always go up was 10 years, right? So what happens is everybody can't let go of that. They can't let go of that. All right. So what you see is that the new trend is underway. Like for example, Metalla and the other gold stocks, okay, are up like 30% since I was on your show last. They're all up the same. It's not like anybody's doing any homework. They're just all up the same amount. Whereas the tech stocks are down, but everybody's like, I'll get into tech stocks now. Okay, now they're cheap enough, right? So they're using the same logic that they used for the last 10 years to forecast today. And that's what people do, right? So people don't believe a new bull market. And then slowly, one at a time, first the most awake people, and then the guys that play tennis and girls that play tennis with those people, then they buy, and then these people, and then some family office people. Okay, well, finally, the people on the school bus do it, and then the trend is over, right? So what you're asking is logical, based on the fact that you got very comfortable with the fact that Amazon and all these companies will just continue becoming as big. But look, Amazon just cut 10% of its workforce. All right. So like that's a massive cut. Salesforce cut a big percentage. Meta cut a big percentage. Like, I mean, these people are cutting and cutting and cutting because that business is fairly mature. And I'm not saying that business goes down. What I'm saying is, my suspicion is the equity value goes nowhere. And I would point people back to Microsoft at the tech bubble. For the next 7 years, it went nowhere. It didn't go to zero. It just if you put $1,000 in, 7 years later, you had $1,000. Do you remember this? I mean, this was like,
absolutely.
It was a perfectly straight exercise if you did that. And you know what you missed? You know what you missed during that? Ask Rick Rule and these people. You missed a huge resource rally, and then a pullback, and another resource rally. Remember the 2004, 2006, like these were massive years in the commodity space. Cement stocks, steel, all these different things were screaming. And that was a weak time for the dollar, and it was a nothing time for the tech names, the biggest tech names. And I think that's where we are again.
Really good thoughts here. I started off by talking resolutions, New Year's. Let's give some tangible things for the folks at home here. Did you make any resolutions or anything you're changing this year? Anything you plan to do different?
Let me say yes. But what I want to share with people is this. Is that there's a picture of Brian Tracy over here. I don't know if people can see, but it's the Psychology of Achievement. I listened to this 20 years ago. I listened many times. I went to meet him. Okay, I was like a young and poor. I went all the way to meet this guy. I got asked him for a photo, and then I mailed him the photo, and he signed it. And he says, "EB, you're the best," and sent it back to me, which I think was so cool that I framed it. But one of the things that affected me more than anything else I've ever done is goal setting. And it's really important that people, I'm happy to share this with people because I do this all the time, is I write my goals down, and I write them down as if I already have them, and I rewrite them, and I write them very frequently. Like every couple of weeks, I rewrite all the goals, and all kinds of goals, like health goals and personal goals and relationship goals, and how I want to treat my children, how I want to have my house look, everything, not just money stuff. And I've done that for 20 years now, and I promise you that every goal I've ever written down, I've accomplished. And a lot of people can't believe that. But what Brian Tracy taught me was that you're programming your mind for success. And when you do that, you soar with the eagles instead of scratching with the turkeys. And so if people want to get serious about success, they'll write their goals down and they'll start today, and they're not going to wait for the new year or the Chinese New Year or any kind of new turnover. They'll start that today. And if you do that, I welcome you into that lifestyle, and I think you'll love it so much that you'll never stop doing it.
Soar with the eagles, baby.
That's it.
That's right. E.B. Tucker, always great catching up with you, getting your thoughts. I thoroughly enjoy it. Thank you.
Thanks for having me.
Thank you all for watching. Don't forget to stay tuned to the Daniela Cambone Show and sign up at danielacambone.com so you can stay on top of all these incredible interviews. And here to tell you, we have an incredible town hall conversation coming up January 27th with myself, Matt McCall, Dan Ferris. It's the first time we'll all be in the same room and talking about things you need to watch in the new year. It's not to be missed. So put that in your calendars. January 27th. That's it for me. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.